Hi everyone, I'm Barbara Scarlett here with a Niagara market update using the latest 7-day and 30-day numbers across Fort Erie and the region. I'm going to walk you through inventory sales, days on market prices, and what that data is showing about pricing strategy. And we're going to talk a little bit about the mortgage renewal cycle. So here in Niagara, the totals over the past 7 and 30 days, active listings in Niagara, 2,057, new listings over the past 7 days, 177, sold in the past 7 days, 69, sold in the past 30 days in Niagara, 294. The 7-day average days on market across Niagara are 55, and the average sale price is approximately $616,000. Now, Fort Erie is sitting with 352 active listings, 7 new listings in the last 22 days, 5 sales in the last 7 days, 31 sold in the past 30 days. 7-day average days on market, 43, and the average sale price over the past 7 days is a whopping $647,000, which is actually higher than across the region. Whatever marketplace that you're focused on here in the Niagara region, let me know. I run my numbers every week and I'm happy to share those with you. If you're considering selling and you're wondering about the approximate days on market that you can anticipate here in Niagara, here are some of those metrics across Niagara. There is a wide range of them across the marketplace, but on the lower end, we are seeing over a 7-day period in Niagara Falls, 39 days, in Fort Erie, 43, in St. Catharines, 48. The higher end of days on market, we are looking at Thorold at 59, Fonthill Pelham at 72, Welland 91, Lincoln 95, and Port Colborne Wainfleet 106. Clearly, you can see that the pace is not uniform across Niagara. It depends on the local supply, local buyer demand, and how many properties are available. Across Niagara, the market has more selection than the faster moving cycle that many homeowners remember. And for that reason, pricing is still a primary factor when you're selling your house. What you need to do is to be very focused on that price, because the early window matters. When listings first hit the market, it typically gets the highest exposure from alerts online, search activity, buyer tours. If the price doesn't match with the current comparables, sales during the early period, showings and offers can be a bit slower to follow. Value is anchored to current comparables. Buyers and lenders focus on the recent comparable sales and today's active competition. Personal financial goals, renovation costs, past purchases, prices about what you paid, they really don't matter. It's about what it's worth in today's market, I'm afraid. The broader reset. Where does all of this fit in 2026? In the broader Niagara data, we've been reading, and I've been posting on my blog and sharing with you in these market updates, sort of a recalibration. Sales are softer year over year. The benchmark prices are lower in several areas across Niagara. That aligns with what we typically see when the market moves from an urgency to a negotiable, and we've been dialed into negotiable for a while now. At the same time, financing conditions have been more stable compared to the rapid changes that buyers were dealing with in the earlier part of this cycle. When rates stop moving sharply, buyers have more time to make decisions, and this is a good thing. So mortgage renewals are here in 2026, another major theme this coming year. Many homeowners will be renewing loans that began during those lower rate periods. What renewals can change in the market over time? Well, some homeowners may adjust. Term changes, amortization changes, refinancing. Some may have to reduce their monthly obligations. They may have to downsize or change their house plans in some way. Investors may have to reassess cash flow in their portfolios. They may want to sell some of their inventory. Buyers may see more selection if inventory grows gradually, and we're starting to see it accumulate again. And we can see that the buyers are now starting to pay attention. So renewals don't automatically mean distress, but they can increase the movement in the market. More movement can affect inventory levels and negotiating conditions. So what to do with all this information? If you're buying, The data shows higher inventory across Niagara and longer timelines in several marketplaces. That can support conditions that a buyer can put in those financing conditions, those inspections, and they can negotiate as well, which is really critical. If you're selling, the numbers reinforce that the days on market vary widely across Niagara, and pricing accurately is so important to getting your property sold. There are without a doubt certain pockets in our marketplace, especially certain price ranges, where it just takes longer, or unique properties that are not suited for everybody, where the seller is looking for additional value and over time they can get it. Well, that's your Niagara market update for February 6, 2026. If you want a breakdown of your specific neighborhood here in Fort Erie, Ridgeway, Crystal Beach, Crescent Park, Stevensville, or any pocket of the Niagara region, reach out. I'll run those local comparables, tell you how long it's anticipated for you to sell your property. Thanks for watching. Don't forget to share this if you know of anybody that's interested in our beautiful location down here in Niagara, and I'll see you at the next update.